back to another podcast episode of All Things Money. I'm Dr. Kent, your host for today. If you tuned in last week, you know we covered quite a bit about the current market sentiment with an emphasis on tech stocks and cryptocurrencies. Today, we're diving deeper into what's been quite an eventful week again. A week full of financial twists and turns. Let's start with the tech sector that really seems to be having a tough time. Let me get into how I perceive this downturn. The tech sector's fall by about 4.7% is significant. Companies like AMD and Micron Technology have taken especially heavy hits, with declines of 17% respectively. Even Nvidia slipped by nearly 6%, which is surprising given their strong fiscal Q3 results. What we're seeing might be a classic case of market overheating in reaction to AI markets, a real DeepSeek moment as coined by Wedbush. For those of our listeners that don't know what I am talking about, please just Google it. It's fascinating because it really illustrates the volatility in tech, particularly with AI at the forefront of investor interest. Remember how everyone was buzzing about AI last year? Expectations were astronomical. Now, the reality is setting in, and it's a bit of a reality check. For investors out there, this is a classic reminder that markets don't grow to the sky. And it's worth noting that, amidst this, Alphabet's new Gemini 3 AI model launch bucked the trend with an 8.4% gain. It shows that while parts of the sector are cooling, innovation doesn't stop. Maybe there's a lesson there for investors about picking the right stocks even within a challenging sector. Let's touch on the rising unemployment rate. Now at 4.4%, it seems like a strikingly high number, considering the job market recovery narratives we've been hearing. This rate is the highest since October 2021. What's misleading is that although payrolls increased by 119,000, which was way above the expected 51,000, it doesn't negate the broader pressures in the job market. The recent prolonged government shutdown definitely played a role here, delaying the September employment report. And with the Fed meeting looming in December, they're likely weighing these developments heavily. Financial literacy is about understanding the multiplicity of these economic indicators and their interconnectedness. Just remember and understand that good news can sometimes be bad news in a different context is key. Policies will, as always, be contentious. Let's have a discussion if I believe the Fed might adjust their stance. The Fed has been strongly cautious in their recent meetings. The rising unemployment might push them to reconsider their strategies. With inflation concerns still in the air, they might lean toward policy adjustments that prevent further overheating while being careful about not stifling growth. It's a tightrope walk, and it is definitely tricky. I'd advise listeners to remain observant, especially if they have investments tied to interest-sensitive sectors. Now, with all these financial ebbs and flows, it is crucial to tune into resources like the All Things Money podcast, because they are so valuable. Let's wrap up with some actionable advice. With market conditions being what they are, you may be wondering what a prudent step might be right now. Well, for all investors, it's critical to stay informed and avoid reactionary decisions. Understand the sectors you're investing in and diversify to mitigate risks. Don't forget the power of staying the course amidst volatility. Markets can be unpredictable, but history shows us that they tend to rebound in the long term. Keeping an eye on major economic indicators and understanding how they affect your investments can have a huge impact, kind of like having your financial GPS up to date. On the whole, balance patience with prudence. That's it for our financial rundown this week. We'll be back after Thanksgiving, so while you're enjoying that turkey, maybe take a moment to be grateful for the financial literacy you've gained. Gratitude is a form of wealth itself. Thank you all for being part of our community and growing with us. Until then, happy investing.